Krishna Kumar Karwa is Managing Director at Emkay Global. He's joining us right now to talk to us about what he makes of the market. Mr. Karwa, thanks very much. Good to have you with us here. Is this up move, Mr. Karwa, maturing? I mean, I think that's the question to ask, because optimism, a little bit of exuberance maybe thrown in, stock recommendations flying all around. These are classic signs. But what do you make of it?
See, I think in the last 3 months, you had a lot of macro factors. Inflation for overseas and locally. So those kind of positives have kind of played out. And plus, you also had massive inflows, basically because, emerging market investors were moving out of China and looking to invest in India. So all those macro positives have kind of possibly played out, and indices have moved up by, say, around 10 to 12% as far as the large cap indices, and maybe the small mid cap have moved up by 15-20%. The stocks also having recovered brilliantly in the last 3 months. So my sense is that natural time to take a breather, and that is what possibly we are kind of seeing in some of the stocks or even in the indices. I think now what is required is obviously the stock-specific micros, how they behave, and how the first quarterly numbers and how what is the commentary of various companies once they start giving their first quarter numbers and outlook. I think that is what is going to be important for the market to further move up. Also, if you look at it, I think the banks, the top 2-3 banks, private banks, which have been having stellar performance, but somehow the stock prices are not reflective of the strong fundamentals. So that also is keeping the large cap index under control. So yes, time to take a breather, time to consolidate. And as you rightly said, that too many stocks, the breadth of the market, at least till a few days ago, was massively positive. And there have been so many blocks which have been offered. I think last month, almost 40,000 crores worth of blocks. Now, the question is, the insiders, the PE fund, the promoters, they sold, and public market investors have bought. Time will say who was smart.
Absolutely. We've been having this debate internally, Mr. Karwa, and Nimesh has been telling us all about the blocks, and even on our digital show, this is exactly the point that we've been raising. Who is the smarter one, the buyer or the seller here? But the buyers are, not just retail investors per se, but a lot of institutions. You could argue it's still retail because mutual funds are buying. At the end of the day, the last man or woman standing is the retail investor when mutual funds buy. But let's see. I think the jury's out on this one. What's becoming clearer is the decline is, by the way, accentuating. I just want to point this out before we get back to the conversation. 18,688, 690. So bulls are finding it tough to hold on to this 18,700 level. The mid-cap slide has deepened. Look at the difference between the Nifty and the mid-cap index. On Nifty is down about less than 0.5%. The mid-cap index is already down 0.8%. So yeah, there we go. So that is the cool-off, very clear cool-off. Started yesterday and it's continuing today. And that is the Nifty for you. The one sector that's really down, the weakest sector so far this morning, is the metal space. Remember, China hasn't done any aggressive easing or any fiscal stimulus, which was exactly the reason why metals were rallying earlier this month. On top of it, other central banks are now coming in hiking rates, and that explains what's going on. Weakest sector of the morning, metal. Look at Hindalco, Nalco, SAIL, Tata Steel, JSW Steel, ferrous, non-ferrous. It's cutting across the lines. That's just a highlight from the morning action so far. Okay, some of those stocks coming up for you. Mr. Karwa, to get back to the conversation now, so what do you do in a market like this? Finally, the cool-off has set in. Now, are there any specific pockets where, let's say, you would advise if people have made a decent amount of money from March, that they should be taking some profits off, whether it is metals, whether it is any other sector, whether it is defense? Or would you be in the camp who would just stay put? Don't book profit, hold on to your stocks. So what's the right way forward, according to you?
See, I think as far as booking profit for buying fresh is always a function of individual stocks and what is the kind of visibility you have for the next few years as far as earnings are concerned. My sense is that wherever investors feel that maybe more than 2 years of growth or numbers are being discounted currently, then the risk-reward ratio is not in your favor to hold on to those stocks and maybe could book out. And that should be the prime reason to book out, rather than just because you have made profits and you should sell. That's not the reason to sell any stock. So it's a very bottom-up individual thought process in terms of how, whether it is just defense stocks or whether it is the banking stocks or auto, wherever you have made substantial gains. Going forward, what is your sense as far as the next 2 years growth outlook? And is it getting discounted? So that's the way one should be looking to book out. And yes, you should be vigilant as far as what you buy fresh, because please remember that you're also buying stocks which would have also moved up by say 30-40% in the last 3-4 months. So does it make sense to buy them now or wait for an opportune time? So yes, I mean, prudent investors have been booking profit. In fact, if you look at the mutual fund inflows also, the SIPs have been holding very strong, but the net numbers have been muted for the last few months. And that's precisely because bulk investors or lump sum profit taking has been happening as far as the investors are concerned, even in the mutual funds.
Hi, Mr. Karwa. Good morning. Nigel on this side. Mr. Karwa, what about the mid and the small caps? Because that's where the big party is taking place. The problem is, you always wonder when the party is going to end, and many investors will like to be closer to the door. Do you think we're still far from that euphoric stage? That was the consensus, actually. We have the editors roundtable that we host every Friday, and the consensus was we're still far away from those levels. Do you agree?
See, yes and no. I think the beauty about our small cap, mid caps is that once the door starts closing, everybody wants to move out and nobody is able to exit. So the prudent investor always believe that to sell when there is a good demand for the various stocks. So that is the way large investors are able to exit their positions in small and mid cap. Now, having said that, I think the whole mid cap, small cap segment is almost like, say, you can say 300 to 400 stocks, and every stock subsector has its own fundamentals, and there are a lot of positive news flows in various sectors, primarily in, say, capital goods and manufacturing and those kind of opportunities. So I think rather than taking it with painting everything with the same brush, I think it makes sense to be very bottoms up as far as selling in small cap, mid caps is concerned. So it all boils down to bottoms up thought process. Is there an euphoria? No, I don't think so. There is an euphoria overall in the market because I think investors were caught unaware. So I think March and everybody was, there was blood on the street. And then suddenly, I think April onwards, the market picked up. I don't think so investors were able to buy fresh into the market. So most of the gains are basically a portfolio gains in terms of whatever you held on to. I don't think so big investing has happened as far as fresh money into the market. So to that extent, yes, there is kind of a left out feeling. And if there are corrections or stock specific, I think there would be more buying than selling coming in. And in fact, it's a very prudent thing that the retail investors who invest in mutual funds, they have kind of booked profits in the last few months. I think they themselves would be coming back to invest in whenever there is a decent correction in the market. And if you see, I think the small cap, mid cap funds have seen the maximum inflows also.
Got it. Mr. Karwa, it's a pleasure, sir. Thank you very much for your time. Lots of wisdom there. And it's always a pleasure speaking with you and having you here on CNBC TV 18.